Hello traders, Gary Wagner with the Gold Forecast. It is the third day of January, Monday here in Honolulu, Hawaii, approximately 10:15, and this is the daily report. Gold this morning is trading under a little bit of pressure, currently down between $6 and $7, trading 14.14, 14.13. As we see, it has gotten a little bit active, and we are trading near the lows of the day, currently down about $8. Strengthening U.S. dollar is accounting for a negative 350, and we do have selling in the market, and that is accounting for about $4.50 to the negative side. On today's report, we will talk about our outlook for the week and what our short-term strategy is, all here on today's daily report. We are looking at a 60-minute candlestick chart. Reason I put this up on the screen is that we can see that as the market came up, it seemed to have found a patch of resistance right in this area just above 1420. And what I am finding interesting is this one particular candlestick, and that is that shooting star that I find to be a very, very strong indicator of potential top activity. And you can see that shooting star, as I say, right in here, and that's followed by this sell-off that took it from about 1420 down to its current print at around 1413, still under selling pressure and still trading near the lows of this particular hour or the session here. So we can see that it is breaking down rather hard. Now, when we go to actually find where that resistance point is coming in from, I really have to shrink this chart down. And when we do shrink the chart down, you can see a few areas that if I carry them over will show us different areas, and particularly this bottom right in here seems to be that resistance point right around 1421, 1422. My sentiment is this: fundamentally bullish, long-term bullish, and I do believe that this marketplace will go through a round of profit taking, but that profit taking should be followed by some sort of a base. Once we find that base, I will in fact look to re-enter the market from the long side. We are looking at that 60-minute candlestick chart, but I have converted it into a Henkin chart, which is a Japanese average chart. The beautiful thing, although it is a lagging chart, the beautiful thing about the Henkin chart is that in periods of tight consolidation where it's range bound, you can see it's alternating between the green and the red. When we have defined trends, either uptrends or downtrends, we get a consistent band of green candles to the upside or red candles to the downside. Now, it clearly shows us that right now we are under pressure, but we do have that alternating pattern between red and green, and as of this moment, we do not really have a clearly defined trend. I think that we've got, in essence, the post-holiday changeover in which as traders come back, evaluate scenarios, and slowly re-enter the market, we're getting a sense or a feel for where this market wants to go. I will end this broadcast by looking at a Henkin chart again, but this time I have shrunk the time scale. We're looking at a 3-hour, 180-minute Henkin chart in which we have a much more clearly defined view when the market tends to be trending and when it tends to be choppy. Such as here, we have obviously a downtrend. These candles that are red, and they're almost consistently red. The same with this. You've got this green. It then goes into a short-term consolidation and then another boost up right in here. You can see this last little rally here, small little rally down, rally up, and now we are back into this kind of a choppy market or consolidating market. This is a type of market that I really wish for it to work itself out, so to speak. As I said, we will look to re-enter the market from the long side. My belief right now is that we need to simply sit on the sidelines. One very, very short note before I end for the day, and that is I did receive a couple of letters that there were subscribers that were trying to update but either had difficulties doing it on the site or simply didn't have the time. I didn't mean to put a time limit on there that would in any way be detrimental to my subscribers. I value your loyalty more than you will ever realize. For that reason, if you were looking to upgrade your subscription status and were unable to do it or just simply want to, please write me an email. I will make arrangements for you to update to the existing price structure. Remember, your pricing will never change, ever, ever, ever change. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily report. Bye-bye.